Good morning. Here is today's Korean economic news briefing. We begin with significant efforts by the Korean government to attract global investment, even amidst a challenging international economic landscape. Vice Prime Minister and Minister of Economy and Finance, Koo Yoon-chul, held an investment briefing in Tokyo yesterday, meeting with over 1,000 global investors at the Bloomberg Tokyo office. His clear message was that, now is the time to focus on the Korean economy, emphasizing the government's consistent and firm commitment to policies aimed at enhancing potential growth and revitalizing the capital market. Vice Prime Minister Koo highlighted several key areas where Korea is poised for growth. He articulated ambitious goals for Korea to become one of the world's top 2 semiconductor powers and a leading nation in the global defense industry. To further enhance Korea's appeal as an investment destination, he detailed government initiatives such as the planned 24-hour operation of the foreign exchange market. This move is expected to significantly improve convenience and reduce market friction for foreign investors. He also underscored the ongoing progress in Korea-Japan relations, expressing hopes for continued positive outcomes in economic and financial cooperation. These proactive engagements are crucial for shoring up foreign capital inflows and maintaining global confidence in the Korean economy, especially as global uncertainties persist. The consistency in policy direction, coupled with tangible efforts to improve market accessibility, aims to differentiate Korea in a competitive global investment environment. However, while the government is actively seeking external investment, a key domestic industry is facing severe headwinds. The duty-free sector is experiencing a significant downturn, with sales plummeting to half their 2019 levels. From 24.8 trillion won in 2019, sales dropped to 12.5 trillion won in 2025, a situation described as even more severe than during the pandemic. Despite a rise in foreign tourist numbers, high $1 exchange rates and evolving consumer patterns are dampening sales. In response, the Ministry of Economy and Finance held the 7th Bonded Sales System Operation Committee meeting yesterday, chaired by First Vice Minister Lee Hung-il, to discuss activation measures for the duty-free industry. Potential support includes measures to enhance convenience for duty-free shoppers, such as no longer reclaiming duty-free items even if flights are cancelled, starting next month. The government's intervention highlights the importance of the duty-free industry to the broader tourism sector and employment, signaling a commitment to stabilize a segment that has traditionally been a strong performer in Korea's retail landscape. Shifting our focus to the global economic environment, several critical developments are creating a complex picture. The United States' economic growth appears to be slowing, with the preliminary fourth-quarter GDP growth rate revised sharply downwards from 1.4% to a mere 0.7% on an annualized basis. This significant deceleration is now intensifying market scrutiny ahead of next week's Federal Open Market Committee, or FOMC, meeting, where the U.S. benchmark interest rate will be decided. While the market widely anticipates a rate freeze, the weaker economic data adds pressure for policymakers. Compounding these concerns is a slight rise in the U.S. unemployment rate to 4.4% in February, which some analysts interpret as an early sign of economic slowdown, despite potential implications for inflation. Adding another layer of volatility is the escalating Middle East conflict. International oil prices have surged for 3 consecutive days, with Brent crude surpassing $100 per barrel, driven by heightened tensions, particularly the U.S. military's aggressive actions against Iran's oil export infrastructure, including the bombing of Karg Island. This dramatic rise in oil prices, combined with signs of a slowing U.S. economy, is fueling fears of stagflation, a scenario of high inflation coupled with stagnant economic growth. In response to these elevated oil prices and their potential impact on domestic inflation and household finances, the Korean government is preparing a supplementary budget. This budget aims to provide support for vulnerable segments of the population and export-oriented companies, leveraging excess tax revenues rather than incurring additional debt. Further clouding the international trade outlook, the Trump administration has initiated Section 301 investigations against 16 countries, including Korea. The U.S. Trade Representative stated that it would investigate whether manufacturing overcapacity in these nations, particularly in electronics, automobiles, and shipbuilding for Korea, is harming U.S. industries. This move signals a potential return to trade protectionism and could pose new challenges for Korea's export-driven economy, adding uncertainty for major industries that rely heavily on global trade. These global headwinds have naturally impacted Korea's financial markets. The Kospi Index closed below 5,500 yesterday, falling 1.72% to 5,487.24, marking its second consecutive day of decline. The surge in international oil prices and the decline in U.S. stock markets prompted foreign and institutional investors to engage in significant selling, with foreigners divesting 1.77 trillion won and institutions 1.32 trillion won. Retail investors, however, acted as buyers, net purchasing 3.07 trillion won to help cushion the fall. The $1 exchange rate also climbed to the 1,490 won range against the US dollar, reflecting a flight to safety amid geopolitical risks. Meanwhile, the KOSDAQ index, after an initial dip, managed to rebound and close slightly higher, indicating some resilience in specific tech and growth sectors. The Korean exchange also announced the listing of 5 new ETFs, including products tracking the KOSDAQ 150, biotech, and AI semiconductor sectors, offering new investment avenues amidst market volatility. Amidst these challenges, some of Korea's key industries are demonstrating innovation and diversification. In the battery sector, SK On, a leading K-battery firm, showcased its expanded technology portfolio at Interbattery 2026. Moving beyond its primary focus on electric vehicles, SK On is now venturing into new areas like energy storage systems, robotics, and drones, emphasizing its vision to unlock the next energy era. Their exhibits highlighted advancements in high-energy density LFP, lithium iron phosphate, pouch batteries, aiming to boost energy density from current levels to 500 watt-hours per liter, alongside enhanced safety technologies. This strategic diversification is crucial for the K-battery industry's long-term growth and resilience. Separately, there's renewed focus on developing dream materials, like superconductors, which could dramatically reduce costs in semiconductor and battery production by minimizing electrical resistance. In the realm of AI, the Economic, Social and Labor Council, ESLC, Chairman, Kim Ji-hung, met with the National Federation of Financial Industry Unions to discuss the impact of AI and digital transformation on the financial sector, particularly regarding employment issues. Concurrently, Polaris Office has announced a strategic partnership with OpenAI, signing a business associate agreement to enter the US AI healthcare market. This move will leverage OpenAI's AI technology within a HIPAA-compliant data environment, signaling growing opportunities for Korean tech firms in global AI applications. Finally, in real estate, the Seoul housing market is showing divergent trends. While apartment prices in Gangnam have softened, the Gangbuk area continues to see price increases, coupled with a persistent shortage of rental properties. The Jaeon's Supply and Demand Index, a measure of rental market tightness, stands at 103.7, with Gangbuk experiencing the highest figures. This highlights the need for continued vigilance in stabilizing the rental market. Interestingly, Singapore's housing policy is gaining attention as a potential benchmark, particularly its strategy of increasing supply during periods of sharp price hikes and imposing high taxes on multiple property owners and non-residents. Looking ahead, the cherry blossom spring season will bring new apartment offerings, including significant developments in Seoul's Magok and Bangwon new towns. In conclusion, Korea is navigating a complex economic landscape characterized by proactive efforts to attract global investment and support struggling domestic sectors, while simultaneously grappling with external pressures from slowing global growth, rising geopolitical risks, and renewed trade protectionism. For investors, this environment suggests continued market volatility, requiring careful monitoring of global developments and sector-specific opportunities arising from Korea's innovation in areas like batteries and AI. For general viewers, the focus will be on the government's ability to manage inflationary pressures from high oil prices and provide targeted support to vulnerable households and industries, all while balancing fiscal soundness. That concludes today's Korean Economic News Briefing. Thank you for joining us.